everyone, Amber here with Atlas Services. Today we're going to be diving into a crucial topic, accurate financial forecasting. Forecasting is a very powerful tool that can be used to transform how you manage your business. Financial forecasting allows you to predict your business's future performance. This empowers you to make informed decisions instead of relying on guesswork. Forecasting helps ensure that you have enough cash to cover expenses, reinvest in your business, as well as seize on any growth opportunities that might arise. Now, imagine it's early summer and your forecast predicts that there's a dip coming in sales over the next 3 months. By identifying this early, you can adjust to reduce discretionary expenses, negotiate better payment terms if needed with vendors, as well as possibly running some targeted promotions to help drive that revenue and avoid some of that dip. To get accurate forecasting, it all first starts with understanding where your business has been. Make sure you have reliable financial statements from the last 12 to 24 months, as this historical data will help reveal trends, patterns, insights, and other information about both your revenue and your expenses. When starting your forecast, you'll want to gather your income statements, your balance sheets, and your cash flow reports from at least those 12 to 24 months. As you review, you want to look for recurring trends like seasonal highs and lows and operational costs, expenses, and other items. You'll want to look for recurring trends like seasonal highs and lows, so that way you can catch those spikes in both costs and revenue. You can also consider using tools that can integrate with your accounting software to automate some of your financial forecasts. Now remember, these tools can only generate forecasts based off of current information, so again, making sure your current data is accurate is vital. So these tools generate models for revenue, expense, and cash flow projections based on your current data. So you can use those tools to run different simulations, like what if sales drop by 20% next quarter? What if I increase marketing spend by 10%? Thinking of different scenarios can help you prepare for both best case and worst case outcomes. You'll want to use a combination of short-term, which are typically monthly, and long-term, annual forecasts to keep an eye on both immediate needs as well as your strategic goals. As you're reviewing, you're also going to want to keep an eye on not only your company's trends, but also the industry trends, changes in consumer behavior, and economic conditions. For example, if you're expecting rising material costs, you'll want to factor that into your forecast so that way it's as accurate as it can be. Incorporate any planned changes as well, such as hiring new staff, equipment purchases, product launches, just so that way you have that information incorporated and you can also use it to assess those impacts on your cash flow. If you're launching a new product, you'll also want to help forecast to understand the upfront costs of production and marketing and how long it may take to recoup those expenses. And forecast is never a one and done process, unfortunately. It is an ongoing item that needs to be looked at monthly or quarterly to make sure that you're always keeping it up to date, you're changing it for any changes that have occurred in your business, as well as any market conditions or other items just in the economy in general. You'll also want to compare your forecasted figures to actuals. This will help you refine your projections and spot discrepancies before they become large issues. Financial forecasting is not just for large companies, it's essential for all businesses of all sizes. It helps you grow, avoid risks, and stay confident in your financial decisions. Now, if you need help making sure you have accurate data to start with for your forecasts, let us know. We can also help with forecasting and organizing your financial data so that way you can have the most accurate forecast and budget as possible.